We published some drill results recently, and at depth, we're finding grades that are higher than we're looking for and widths that are better than we're looking for. And that confirms our understanding that Blanket will be there for many, many, many years to come.
Hello, you're watching Proactive. I'm joined by Mark Learmonth, the Chief Executive of Caledonia Mining. Mark, very good to speak with you. You're out with your first quarter results. Could you take us through the main points, please?
Yeah, thank you. Good morning. As we announced our Q1 production some weeks ago, so it comes as no surprise that production for the quarter was somewhat lower than we'd expected, and so it's no surprise that really flows through into the financials. So production was 14,700 ounces. Lower than the corresponding quarter in 2025, and that's almost entirely due to the grade, which was lower. Production was low. We actually only sold 13,700 ounces of gold. 1,000 ounces was added into working capital, which was then sold immediately after the end of the quarter. But all of that had an adverse effect on cost per ounce. So the on-mine cost for the quarter was just over $1,700 an ounce, which is considerably higher than it has been previously, and we can do a lot better than that. Nevertheless, as a result of the higher gold price, profit and cash improved. EBITDA was up 50%. Free cash flow tripled to over $12 million for the quarter. And it's also pleasing to see that our liquidity, so cash plus undrawn facilities, plus the revenue, the amount owing to us in respect of gold deliveries, we had liquidity of nearly $200 million at the end of the quarter. But it was a difficult quarter, and we can do better than that.
Mark, a number of changes are being implemented at Blanket. Could you talk us through those changes and how you expect these initiatives to support improved results over the remainder of the year?
Yeah, okay, thank you. We have done quite a lot already to improve the grade, and so you'll see in the RNS that we put out this morning, month on month, the grade has improved, and it is now running pretty much where we expect it to be. So hopefully the difficulty that we encountered at the end of 2025 and into this quarter, as the first quarter, have been dealt with. We're accelerating the rate of underground development. Development contractors have already started work, and they'll be working for the balance of the year to open up new high-grade areas. And the other thing that we're doing is we're moving the mine onto 7-day working. Currently, it's on 6-day working. We're primarily doing that to bringing it in with a new sort of shift system, primarily to reduce worker fatigue. But it won't go unnoticed that when the mine running at 7 days a week instead of 6 days a week, we will be producing more ore, which in due course will flow through into higher production. So there's quite a lot happening behind the scenes to address the issues that we faced in the first quarter.
You've reiterated your full year production guidance despite that slower start. What underpins confidence in maintaining that range, Mark?
Well, correct. And as we identified when we put out the initial guidance for 2026, we did make it very clear that we expected the first half to be weaker than the second half. So we'd already been very clear about that. I've outlined 3 or 4 initiatives that are in place at the moment, which give us confidence that the second half will be considerably better than the first half. So at this stage, we're very comfortable with that full year guidance.
Deep level drilling at Blanket continues to deliver positive results. Well, what does this say about the mine's long-term potential?
Yeah, you're quite right. We published some drill results recently, and at depth, we're finding grades that are higher than we're looking for and widths that are better than we're looking for. And that confirms our understanding that Blanket will be there for many, many, many years to come. Existing life of mines out to 2034. We will be publishing an updated reserve and resource statement and a new technical report later on in the year. But it gives us great confidence that Blanket will be there for many years to come. But also, I think something else you should look out for is the success we're having on exploration activities, shallow exploration activities, really just at surface. Looking for oxide material. And again, that's looking very encouraging. We should hopefully have some news about that in the middle of the year.
Following the feasibility study and recent financing, what's the main priorities for Bilboes in 2026?
Well, the main priority on Bilboes is to build it. So the funding is going well. Clearly, we had a very successful bond raise in the States in January. We're making good progress on the interim funding, which is a relatively shorter term series of bank facilities in country. Then that will be supported by a bigger, longer term project financing. So the work on the interim facility and the project financing is going very well. The project has now been frozen, and we're working on the final engineering designs. And we expect to start placing orders for long lead time bits of equipment in the third quarter, with boots on the ground by the end of the year. So we're really focused on actually getting Bilboes built as quickly as we can now.
Looking ahead, Mark, what should we expect to see from Caledonia as we approach the second half of the year?
Further progress on Bilboes, as I've just outlined, in particular the funding, and an improved production and cost performance from Blanket.
Well, Mark, I look forward to speaking to you again very shortly. Thank you very much for your time today.
Good. Thank you very much. Thank you.
Mark Learmonth, the Chief Executive of Caledonia Mining.